Welcome to CNBC.com. I'm Frank Hollan, anchor of Worldwide Exchange. XPO, a logistics company, reported its earnings this morning. Top and bottom line beats. The stock is moving higher. To discuss the quarter and much more, I'm joined by CEO Mario Harik. Mario, thanks for joining us. Stock popping after not only the report, but after your call. Talk to me about this beat when we're talking about the top and the bottom line. What was the driver for the quarter?
Well, overall, Frank, our strategy is working, and we're improving margin in the trough of the freight markets. In a freight recession, we are improving our operating margin, growing earnings, growing revenue as well. Now, the drivers go back to our strategy. We're delivering best-in-class service to our customers, and that keeps on improving. And customers are giving us more freight to reward us with the great service that we are offering them. We're also launching new service lines, and we're growing with small to medium-sized customers. So many items of our strategy are working as expected, and this is enabling us to outperform the market.
All right, Mario, when we're talking about your customers, we're talking a lot of big names like a Ford, Caterpillar, Deere, 3M. You say they're giving you more freight. What kind of freight are they giving you? These are generally industrial customers of yours. I mean, are we seeing a pickup in the industrial economy?
So we're not seeing yet a pickup in the industrial economy. We are in a soft freight market, Frank, but where we are seeing growth is predominantly with the small to medium-sized customers. So think of these as being small local manufacturers or consumer packaged good companies. And we're seeing growth in that segment, but that's driven by what we are doing as a company. So far, year to date, we have added more than 7,500 new customers in that segment of business. And that's predominantly driven by the improvements we have done in our service product, picking up the freight on time, delivering it on time, and delivering it damage-free every single time. So this is where we are seeing the growth. On the industrial economy, we continue to be in a sub-seasonal environment. If you look at the ISM manufacturing index, that is still in a contraction space. It's still below 50. So we are seeing lower industrial demand, but there is more optimism for 2026.
All right, I want to get back to what you were talking about, your margin expansion. You're talking about your operating ratio. In this case, lower is better. It's an efficiency metric. So this quarter, 82.7. A year ago was 84.2, 150 basis points of improvement. You also mentioned that you're using AI in your line haul service. Talk to me. Is AI helping you improve margins?
It absolutely is. So we have been using AI in a number of applications across our business. But it's not the AI you hear about in terms of replacing people doing a certain amount of work. It's about efficiency. It's about optimization. To give you an example, in our line haul network, every single night, we drive 2.6 million miles of freight moving across the country, both the US and in Canada as well. And what we're doing with AI is optimizing how that freight is moving across the country. Just to give you an example, here over the last quarter, we reduced our empty miles by 12%. That's good for service, and that's good for overall cost and how we're moving it. And we have multiple other initiatives where we are leveraging AI to make our company a more efficient company in how we service the customer.
All right. You were very careful to say that it's not about removing headcount or laying off employees, but I do want to ask you, is AI leading to the replacement of some employees in some capacity? This week, we're obviously talking a lot about UPS and their workforce reductions along with Amazon.
It's not in our case. It's about higher efficiency in terms of getting more productivity in how we operate the business. To give you an example, with our sales force, what we are doing with AI, we do things like lead scoring, or how we actually find the right customers that we can actually service from an LTL service perspective. But that helps our sellers become more efficient in how we are operating the network. Similarly, when you think about how we operate our network, well, you can either operate a freight route that is inefficient, where you are going from point A to point B to point C back to point A, or you can run a more efficient route. And AI in that particular case allows us to run those routes more efficiently. It helps with service and it helps with efficiency as well.
All right, Mario, just because of the news this week, I do have to ask you very plainly, are you sure there's no operational roles being reduced from AI? And also want to ask you, when do you see the day that AI, or what physical AI it's often called, is actually in your operations, whether it be robots or robotics that take the place of human workers?
I think that's a very long runway. I mean, for us, if you think about it, we actually move freight. And when we move freight, our drivers do multiple stops in a given day. So they are actually interacting with customers. They are actually going on a customer dock, moving the freight, delivering the freight. And we don't see AI replacing that anytime soon. But when you think about it, it's all about how do we make how we use data in our network and our business to operate our business more efficiently is how we think about it in terms of the application of AI, specifically in the less than truckload industry, And again, it enables us to run a more efficient company. But if you think about drivers and dock workers moving freight, that's going to be a long, long time before robots can do, if they can ever do this kind of work.
All right, I'm going to take your word on it. For the people that don't know, you got a couple degrees from MIT in computer science and engineering. So if somebody would know, it would definitely be you. I want to go back to your customers. We mentioned some of those big name customers, Deere, 3M, Caterpillar. What are they saying to you about the tariff impacts to their business and their confidence actually to bring in inventory, to move freight, which are obviously in your wheelhouse?
Well, but I think if you take a step back, tariffs are good medium to long term for the less than truckload industry. And there's a reason for that. So Frank, if you think about it, if a product is being built somewhere abroad, and all the inbound freight into a manufacturing plant is not going to move on a domestic truck, it's going to move on a foreign truck. When you move, and it's not that companies are planning on moving 100% of their manufacturing back to the country, but even if they move 20 or 30% of it back, you're going to have more freight into the environment because now you have to move the parts, the raw materials into a manufacturing plant, as well as the finished product at the end of that process. Now, what you saw in 2025 was that given the uncertainty with tariffs, you had a lot of customers want to defer their capital deployment just so they can get that certainty. Now, as that is getting behind us at this point in time, we can start seeing effectively companies want to deploy that capital, whether it's say farmer buying a piece of equipment, or whether it's somebody refreshing their HVAC equipment, as an example. All of these pieces, you're going to start seeing them materialize with having a bit more certainty into the environment. The other side of this is the Fed fund rate. So as you start seeing rates coming down, what you will also see, usually that's inversely correlated with the ISM manufacturing index, you will also see industrial demand in the country go up as well.
All right, so it sounds like you're bullish going forward. I do want to point out, you gave guidance and out there for the next quarter. It's pretty much in line with the estimates. So if you're seeing this bullishness, and then you also want to add on something that you probably didn't have time to add into your earnings materials, but the president reducing tariffs on China and also making some other deals in Southeast Asia. How does that color your view of Q4 2026?
I think on a quarterly basis, we do survey our top customers to get their feedback. I think Q4, it's too early to see an impact. And even for 2026, Frank, it's very hard to call the macro. I mean, nobody knows when that demand inflection is going to come. This said, there are much more positive signs. From one perspective, tariffs are normalizing, which means that deferral of capital, companies will have more confidence in deploying that capital. You're seeing the Fed fund rate come down, and over time, that stimulates industrial demand and manufacturing in the country as well. You have the big, beautiful bill that actually helps with taxes, and it pushes companies to want to buy equipment in the near term so they can get 100% bonus depreciation on that. So there's a lot of good levers that are pointing to a recovery, but at the same time, this is not a macro that somebody can easily call. We'll see what next year has in store for us. But for the medium to long term, the way we think about it is, even as the markets are soft, we're improving margins and growing earnings. And we've been investing in our network. And as the markets recover at some point in time, we'll be there to support our customers and accelerate both our earnings growth and margin expansion as well.
All right, got to touch about the consumer as well. I know most of your business is industrial, but you do have some consumer-facing customers like an Ulta Beauty, for example. What are you hearing on the consumer side of your business when it comes to inventory and demand?
But overall, for the consumer demand, it's been holding steady if you look at it on a year-on-year basis. If you look at the retail sector, or the consumer-based sector, it did better than the industrial counterpart here in the third quarter. So consumer demand overall seems to be holding based on everything that we are seeing, and we are seeing it outperform what we are seeing from an industrial economy perspective.
All right, Mario Harik, stock moving much higher after earnings. Thank you for your time. Really appreciate the insight on what's going on in the supply chain and less than truckload trucking. Thank all of you for watching this interview with the XPO CEO. I'm Frank Hollan, anchor of Worldwide Exchange. You have a great day.